10-year Treasury yields moving higher, making another new high of this move, getting as high as 265. We're seeing a modest pullback during the rest of the session, getting as low as 256. So about a 10 basis point range today. We end up settling right around 260, up slightly from yesterday's settle and yield. The key, though, today wasn't so much the 10-year yield itself. It was the relationship to the shorter dated yields. Looking at that 2-10 spread, which traded as low as -9 inverted on Monday. Today was at +10. So a significant reversal in that 2-10 yield curve that we talked about. When it's negative, it signals the possibility of recession. Now we're back positive, despite the fact that it is still very low on a historical basis. It is no longer trading negative. So something to keep an eye on moving forward. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility has gone back to trending with yields. So we see volatility moving higher, we see yields moving higher, and vice versa. That's exactly what we saw today. Yields moved higher, we saw volatility moving higher with it. Likely, there's also a lot of uncertainty when you start throwing around central bank minutes and you start talking about economic risks and geopolitical risks. They all remain elevated, and volatility, while it did move higher today, does remain elevated from its moving averages. So volatility moving higher today with yields. Lastly, what do we have the rest of the week? Well, we have the claims numbers tomorrow. Claims number gives our in the moment look at the job market, expecting 200,000 new filings, right on the average that we've been seeing over the last several months. We also get St. Louis Fed President Bullard speaking. One reason I highlight that is because Mr. Bullard spoke on February 10th and was very hawkish and aggressive in talking about the need for more aggressive rate hikes. That's exactly what's likely to happen here, given the fact that we started our rate hikes in March, and now they're talking about doing more aggressive 50 basis point rate hikes down the road. It'll be interesting to see what his comments are now that the markets are actually doing what he said they might do. So 10-year Treasury yields midweek continue to push higher. We have the claims numbers tomorrow, and next week we'll keep an eye out for inflation data in the form of CPI and PPI.